Got the chat fixed. Hello, everybody. It is I, Eagle Dog, aka Matthew. And I finally figured out how to do chat. I got it figured out, I don't know, 10 hours ago or so. And I'm almost finished up with this analysis. I'm going to find it here. Yeah. Got some highlighted areas that need attention. But I have got it. No. There we go. Yeah, I got it mostly in good shape. So now what I'm going to do is I'm going to go through and double check the highlighted areas, double check all the other areas too, and just going to be mostly finishing this thing up and probably trying to figure out a way to publish it, actually. Gosh, come to think of it. Yeah. So it's going to be a fun time. I'll just put this in the chat to let everybody know what's going on. Let's see. It's about 2 a.m. in Utah. That's like, what? 2 minus 6 goes to 12 minus 4. I guess it's like 8 a.m. in Australia right now. Okay, let's see. That's a pretty much a stab in the dark of a guess. But I'm going to see if I can figure this out here. Oh, not that one. Let's see, this one. Okay. My question is, what time is it in Sydney, Australia, right now? Well, the search results are not as good without the AI, I have to say. But it uses less energy. .06 p.m. Oh, it's not morning, it's evening. So it's 4 hours later there, not 4 hours earlier. What about time in Western Australia? Perth. 4 p.m. Okay. Right now it is 4 o'clock, actually more like 4:04 p.m. in Perth, Australia. I will be writing, editing, and publishing for the next couple of hours or so. Yeah, I'd say about 2 hours. And the time in Utah is currently 2:04 a.m. Oh, and whatever arithmetic I was talking about is just completely off. I was saying like 6 hours later. No, it's not it either. It's like 14 hours later. 16 hours later. Or is that 10 hours earlier or 8 hours earlier? What a great way to start my day. I got some really helpful stuff in the chat earlier. I'm really I missed some people in the chat yesterday. So I just made some verbal comments at the very end of the broadcast. So I was not fully operational with chat, but now I am. So this is sweet. Yeah. Good. 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 Dun, dun, dun. Dun, 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 dun. Dun, 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 dun. Dun, 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 dun. Dun, 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 dun. This might be a little bit strong. Try to tone that down a little bit. It's nice also to take some time away from the document and then return to it the next day, because now I can see that as I scroll through from the top, the first table that I'm looking at is income and expenses for the last 4 years. Cost of goods, operating expenses, total expenses, total revenue, other income, net income. That is an interesting table, and I can dramatically improve it. What I will do is I will take total revenue and other income, and I will combine them. And that'll be much, 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 much easier to read and understand and make sense of. Got it marked. That is going to be an excellent upgrade. Right there, compensation expenses just show that really tells the story here. And if I put it into print preview, then we don't have that highlight, or we don't have those grid lines, and you can see this is what it's going to look like on the page. This is reflected by a rapid increase in operational expenses, particularly with regard to salaries and wages. Yep, that's exactly true. Compensation expense has increased rapidly during the past several years, representing a dramatic increase in new hires. Rapid hiring carries an inherent challenge to adequately train new employees and to develop efficient business processes. To date, BAM franchising has not converted growth into profits. Rather, the company is playing catch up on past commitments. Instead of carefully managing expenses, BAM franchising is scrambling to deliver on unfulfilled promises. Therefore, I consider it inappropriate to ignore the unearned revenue liability, or in other words, I think the company's net worth is accurately described as being in the red. Yeah, that's true. Outlook. It appears that as long as they continue attracting new franchisees, BAM will continue to have adequate cash for operations. However, what would happen if BAM stopped adding new franchisees? How many Lego reseller stores would represent market oversaturation? I don't think that is necessary. However, what would happen if BAM stopped adding new franchisees? What if the company runs into a large public image PR crisis, causing prospective franchisees to become skeptical? If the company were to have strong underlying fundamentals, it would be able to weather a storm. But this company has weak fundamentals. Its operational capital is currently derived from sales and not from income. This calls into question the company's ability to weather a market downturn, a natural disaster, or a public relations crisis. Those are the I guess the two main outliers is market downturn or natural disaster. Those anytime that a bank is evaluating financial statements to make a lending decision or an underwriting decision, those are the two big outliers or the two big variables. We're always looking at financial statements to say, okay, based on everything we see here, then what if there was a hurricane? Okay, then after the hurricane, what would everything look like? Maybe a hurricane is a bit of a strong example, but let me think of a better example. Well, no, yeah, some hurricanes. I guess, a big, huge hurricane is not, that's truly an outlier. The lenders are not making their decisions based on that. If there's a massive, ginormous hurricane, then that ends up going to the insurance companies. But let's say there's like a medium-sized hurricane that just kind of affects the area. Oh, or like the COVID. So the COVID outbreak is kind of like a natural disaster. What's that? Disease epidemic? This calls into question the company's ability to weather a market downturn, a natural disaster, a disease epidemic, or a public relations crisis. So obviously I'm adding the public relations crisis in there for impact. Let's actually take that out. There we go. This is better. This calls into question the company's ability to weather a market downturn, a natural disaster, or a disease epidemic. Those are kind of the natural. There's always these are the natural amount of type of situations that you got to be ready for. I'll just describe it in terms of lending on residential development. So back in the early 2000s, we'll say around 2005, let's say, the housing market was doing well. It was in an upward trajectory. And the banks were not having to foreclose on properties. The banks were not losing money on foreclosures. However, the lending decisions were always based on the idea that you never know when the housing market might have a difficult time. So then in 2007, 2008, 2009, 2010, the housing market had a massive decline. You might say it crashed. I think crashed might be too strong of a description, but definitely there was a massive market correction. During that market correction, the banks, which had said yes to all these loans, even though the companies that they were lending to did not have strong, fundamental, well-capitalized business operations, then those banks ended up having to foreclose on a lot of properties, and a lot of those banks themselves went out of business. Whereas the banks that had said, no, we're not going to lend to you because you'll do fine as long as the housing industry keeps taking off and keeps going up, 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 up. But if there's ever a market correction, then you might have difficulty making it through that time. You want the company to be able to make it through that stuff, through some bad weather. You got to save for a rainy day. Where is the rainy day fund? There we go. Where is the rainy day fund? That's the question for these guys. So this is a paragraph right here. This is going to be a paragraph right here. And this is going to be a paragraph right here. BAM Franchising Inc. excels at selling franchise agreement contracts. During the past 4 years, BAM Franchising Inc. has sold about 250 franchise agreement contracts. To people of faith across the United States and Canada. Is that right? 250 franchise agreement contracts? Let's see. Total stores at year end. Okay, so they had, as of the end of 2021, they had 41 stores. There we go. 1 year, 2 year, 3 years, 4 years. Yeah. And they claimed that they had 300 before year end in a press release. So we're going to use this number. And we're going to start with this number. So we're going to say, according to their claims, that they've sold that minus that many contracts. Hey, I'll show you guys how to make a cool formula. Do you guys know how to do these fancy formulas in Excel? Check this out. All right, F2 to edit the cell. And so what I'm going to do is I'm going to use, okay, so it's going to be equals, open quote, close quote, what is it then, and, space, this, and, space, open quote, contracts sold. Since YE 2021. LibreCalc found an error in the formula. Do you want to accept? Yep, that looks like what I wanted. Oh, I think I forgot the close quote at the end. Now check this out. Yep, it worked. The only oh, I know. See? Worked. I had just, the only mistake that I did is I forgot to put the close quote at the end. So, but then I'm going to put a space at the beginning, maybe 2 spaces at the beginning. There's the magic right there. That's it. Put some spaces. You always you need the quotation marks right there. Then you do the and sign, and then you put whatever formula, and then you do the and sign. And then you put your text in between quotation marks. And I was missing a space here. Put 2 spaces. Okay. See that? Boom. Yo. Take that right here. According to the company, I have a dry throat today, y'all. I think from talking, maybe. Maybe if I eat some nuts, maybe that'll help. Isn't that what your grandma always told you? If you have a dry throat, eat some nuts. That ought to help. According to the company itself, I'm just trying to figure out how to attribute this statement, because I don't want to just claim that they sold 259 franchise agreements or 259 franchise agreement contracts. Without attributing it. That would be like, like AI. When AI is like, yeah, totally, it's true. And then it's just just random nonsense. That's called lack of attribution. So they sold 259 franchise agreement contracts between according to the company. There we go. Perfect. Now it is attributed. Mm-hmm. Mm-hmm. And not to be. Ah, nice. Hello. Hello, wake breaker. Hello. If you break the wake, I think that means you catch air, especially if you hit it on the backside. I'm not sure. There's many different types of wakes. Ooh, or a wake could be a period of mourning, and then you could break the wake by ending the period of mourning. Good afternoon, Australia, and also to the rest of the world. The company's primary goal during the past several years appears to have been to grow as quickly as possible without apparent concern for fully capitalizing the company's growth. BAM Franchising Inc. sold 259 franchise agreement contracts between December 2021. Let's see. Like the police vids. Wakeboarding. Okay. Nice. Breaking the boat wake. Yeah. At one point in my life, I was able to do a 180 as I was jumping over the wake and land backwards. I bet I could still kind of do that. Hey, that's thanks for watching those police videos. They're like completely raw and unedited and not really organized, but I'll put those together in a more organized fashion when the time comes. Yeah, I used to do a lot of wakeboarding actually. We used to go wakeboarding at Lake Powell, backside 180. Yeah, that's basically the way to learn. That's I'll tell you another thing too that actually might even be for people who are still learning a first step. Thailand. Yes, Thailand is watching. The world is watching. Heck yeah. Heck yeah. Oh my gosh. That's so cool. Yes. Oh my gosh. That's so cool. For beginners on the wakeboard, once you've already got some control of moving around and everything, before you quite get ready to do a 180, there's a thing I would call it like a slide, like a rail grind. Like if you imagine somebody on a skateboard and then they kind of slide along a curb sideways with the skateboard. I think we used to call that a rail grind or something. But oh yeah, I'm just telling you for everybody else. You know about what I'm talking, or we know. No, I don't. I'm not sure. Does that mean we know about the rail grind or about something else? Anyway, if you before you get to doing a 180, if you just kind of get the wakeboard to go sideways a little bit, and it's actually possible to just completely just ride the wake with the wakeboard just completely sideways. So it's not going forward or backward. Oh yeah, so you know what I'm talking about with skateboarding. Okay, I'm telling you all this as an amateur. Okay, I'm not trying to teach you anything. You know way more than me about this. I'm just saying this for anybody out there who has not done it before. If they're watching, or if they come back and watch this video later, that and I might ask you, sir, if you would be able to verify whether or not this is a good way before you get ready to do a 180 on a wakeboard, if you can get it to go sideways a little bit and kind of skim on the top of the wake. You know, hey, I'll tell you a trick you can play too. You pretend, you tell your friends that it's your first time wakeboarding, or you tell some people you've never, your friends already know, but people that you've never been out with, you tell them it's your first time. And then when you get up, you get the wakeboard going sideways and you're skimming along the wake and you pretend like you're out of control and you're about to crash, but then it turns out that you're totally in control. I did that prank on somebody one time. It was pretty good. It's kind of deceptive though. It's kind of like I used to play pranks a lot. I'm not into pranking anymore. Now I kind of think pranking is not cool. The company's primary goal during the past several years appears to have been to grow as quickly as possible without apparent concern for fully capitalizing the company's growth. BAM Franchising sold 259 franchise agreement contracts between December 2021 and December 2025, according to the company. Yes, learning to hold the board edge up sideways is super important as long as you lean back just right. Ah, like snowboarding. There you go. There you go. Like you, exactly like snowboarding. And everyone has caught that front edge while snowboarding a lot of times, and you can catch that front edge wakeboarding as well. And it can be pretty brutal to catch the front edge. Thank you for confirming that sideways, holding the sideways board edge is an important general technique for different types of board riding. Yep, crashed so hard that way. Oh my gosh. Just talking about it, like I almost don't want to talk about it too much because it brings back the memory of what it was like. That's true. You have to make mistakes to learn. You have to forge your way forward into the jungle, but not go too far. You go a little bit too far, get injured, and then recover, but then you learn a lot about the jungle by doing that. All kinds of scenarios are like that in life. You have to try new things to learn anything. Well, or follow rote instructions. Following rote instructions has its place, but the it's a very slow way to learn. Learn a lot faster by learning the rote instructions, but also by doing hands-on effort and trying things out in real life and making mistakes. The real key in life is to be able to acknowledge mistakes. I've been researching narcissism lately, and it turns out that essentially the fundamental nature of somebody who has a narcissistic personality or narcissistic habits even is an inability to acknowledge mistakes. So this type of a person makes mistakes just like everybody else does. We all do. But they are not able to acknowledge the fact of having made mistakes. Hey, thanks for saying that. I'm just repeating stuff I've learned in the last, well, primarily in the last 6 months, but also in the last 20 years, 15, 20 years. But really, mostly this is all Dr. Sam Vaknin stuff. So he's the world leading authority on narcissism. Anyway, that guy, Dr. Sam Vaknin, and there's so many other. Oh, there's also Richard Grannon. Also, I've learned a lot from. But basically, the ability to acknowledge a mistake is called reality testing, and so that means I'm able to acknowledge reality and test reality, and I'm able to say, oh yeah, the truth is that I did make a mistake. But a person with narcissistic personality disorder is not able to do that. It's just not part of their cognitive method. They just won't admit reality. They keep distorting reality. And that's called impaired reality testing. During this time, so they sold all these contracts, but during this time period, the company's net worth and retained earnings decreased from, let's see here, net worth retained earnings. In 2022, oh, I didn't have it highlighted yet. Here on my papers. Retained earnings. 2022. Cool. Even though I'm just getting the numbers to plug them in here, I might as well highlight them while I'm at it in case I go back and need to find them again later. So during this time period, the company's retained earnings decreased from negative 442,000 to negative 819,000. Net worth during this same period decreased from negative 182,000 to negative 621,000. I could also point out treasury stock purchases and paid in capital during that time period. And that's not something I don't think I've even addressed yet in my write-up. I don't think I have any tables about that, but I think that's an important detail to consider. I got to find my reading glasses now. All right, cool. I'm going to add in another table. I'm going to add in the equity table. Equity. There we go. This. Oh, paragraph style. Alright, if y'all use LibreOffice, I know everybody mostly uses Microsoft Word. But if you do use LibreOffice and you ever run into this problem with the tables, it has to do with the paragraph styles. You could have the same problem in Microsoft Word, but I've mostly encountered this here with LibreWriter. There we go. Sometimes if you're using paragraph styles, you might feel like, oh no, what happened? It's okay. It's okay, just change the style. Yeah. Or a public relations crisis. Let's get that out of the way though, because it's distracting me. I want to get another column in here for 2021. Oh, I think is that controlling interest? Non-controlling interest. Gosh darn it. That complicates things. Yeah, I don't know what to do about this non-controlling interest here. I would really like to just consolidate it in with the treasury stock, but I don't see a clean way to do that. Oh, wait. A non-controlling interest, that could be considered paid in capital, I believe. Let me think about this. I'll ask DuckDuckGo. We'll see what DuckDuckGo says about this. So my question now for DuckDuckGo is, non-controlling interest. For generally approved accounting principles, is it acceptable for me to combine non-controlling interest with paid in capital? For me to consider, I guess, combine non-controlling interest with paid in capital. Okay, accounting for non-controlling interests. Deloitte has an article about that, so that's good. It's looks like the same. No, this one's a year later. What is non-controlling interest? 10 minutes to explain a 30-second concept. 18 minutes to describe 2 minutes concept. Ooh, dividends paid to non-controlling interest. Now that is worth 10 minutes. And you can see it looks like a chessboard or something. That's probably appropriate. GAAP versus non-GAAP, non-controlling interests. See, this one might be interesting right here too. See, oh, except that I think it might be in a different language. Okay. What else do we have here? Business combinations they're talking about. Oh, look at this. The acquirer recognizes goodwill if the consideration transferred, plus the fair value of any non-controlling interest in the acquiree and the fair value of previously held equity interests, if applicable, exceeds the acquired net assets. Assets acquired less liabilities assumed. So in some cases, they recognize goodwill, which is basically an increase in equity. That's a nice little blurb right there. Yeah, here we go. Understanding how to evaluate and consolidate entities in which a reporting entity holds a variable interest and how to account for minority stakes is essential, so that could be interesting. CPA exam mastery. I wonder if they have crap tons of pop-up ads. Nope. That's nice. Hey, I like this. This seems pretty consolidated. This is what I'm looking for. Reporting variable interest entities and non-controlling interests. Variable interest entities and non-controlling interests are two key considerations. It's like Grandma always said, just eat some Cheerios if you have a cough. She says, just if you're coughing, just eat some Cheerios. Understanding how to evaluate and consolidate entities in which a reporting entity holds a variable interest and how to account for minority stakes is essential for accurate financial statements. This is fundamental. Yeah, fundamental for any business. This section delves into the concepts, requirements, and practical application of these topics under U.S. generally accepted accounting principles, referencing ASC 810 consolidation, while also touching on key differences under IFRS. So this rule right here will probably provide me with the actual information that I'm actually looking for. FASB, but I want ASC. I just want the actual ASC official website. Oh, it looks like it's under FASB, but they also have the ASC. There it is. That's not what I want. Thank you very much. Cool. For an overview of updates to the website, there's a video. Okay, I'm good. Access. Yep. Wait, that's the one I just looked at, right? Yeah. Yeah, thank you. I already copy and pasted it. Oh, this is great. This is great. What is codification? What is the codification? Welcome to the accounting standards codification. What? Codification what? I was expecting another word. It's like they're kind of leaving me hanging there. It's just called the codification. I do not accept. No. Whatever. Oh my gosh, this is awesome. Hey, thanks, Wakebreaker. Good work. Hey, yeah, I just found something really good. I found the actual code of the accounting standards. So this is awesome. And I learned a new word, the codification. Bum, 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 bum. Codification, dun, 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 is the single source of authoritative, non-governmental U.S. generally accepted accounting principles. The codification is effective for interim and annual reports ending after September 2009. All other accounting literature not included in the codification is non-authoritative. Wow. How to use it, help topics, download the user guide, what's new. This is fantastic. Grandfathered content, subsections, hierarchy. That's good. All right, so what I'm looking for is... Oh, I just had found it. What was it? This one. 810 consolidation. Consolidation, there it is. Sweet. Overall status, transition. Oh, but it's huge, right? Oh yeah, it's huge. Oh man. Um Okay. So now we got, this is the actual code. So now we'll go back to the textbook. Okay, so now we're at the textbook again, cpaexamsmastery.com. I like it because, ooh, they're letting me they're letting me decline analytical cookies, so I appreciate that. Thank you. And I also appreciate the fact they don't have a bunch of crappy pop-ups. This seems like a very useful website. So we're talking about ASC 810, which is consolidation, and ASC stands for the codification. And then differences under IFRS, which is a different accounting code probably. We will explore fundamental VIE, variable interest entities, criteria, primarily beneficiary identification and ongoing reassessment. We will also discuss how and why non-controlling interests, sometimes referred to as minority interests, are presented and measured in consolidated financial statements. To bring these abstract theories to life, we include illustrative flowcharts, real-world scenarios, and best practices to help you recognize and record the variable interest entities accurately. So legal structure in which investor holds a controlling interest based on contractual or even non-traditional mechanisms, rather than through majority voting rights. So it has to do with a person who has equity in the company but doesn't not have a vote. Determining whether an entity is a VIE. An entity is considered a VIE if it meets specified criteria which typically focus on whether the total equity investment at risk is insufficient to sustain its operations. The equity holders as a group lack the power to direct significant activities. The equity holders are not exposed to typical ownership risks and rewards. The flow of determining whether to classify an entity as a variable interest entity can be visualized as follows. Potential investee identified. Does the investee have sufficient equity to finance its activities? Less than 10% of expected costs? Yes. Do equity holders possess substantive decision-making rights? Yes. Are the equity holders exposed to typical... Oh no, we're not talking about Ammon and them. We're talking about equity holders that do not have the substantive decision-making rights. So yes, they are a VIE. So this flowchart is saying that there might be someone who does have decision-making rights, but are the equity holders exposed to typical risks and rewards of ownership? So even if they're able to vote and even if they have decision-making rights, they might still be a minority interest holder, or a variable interest equity holder, because if they don't have any of the risks, if somehow they're removed by a layer of a shell company from being exposed to risks. And then otherwise they're not a VIE if the owners are exposed to normal risks. In practice, a 10% benchmark is not definitive. Does the investee have sufficient equity to finance its activities? 10% less. Okay, so I'm not positive on how they measure all that. Management must analyze whether the at-risk entity can truly absorb the entity's anticipated losses or return variability. If an entity is determined to be a VIE, a more thorough evaluation follows. Primary beneficiary, reassessment, non-controlling interest, presentation and measurement. Non-controlling interests are presented in the consolidated balance sheet under the equity section, separate from the parent's equity. Dun dun dun. Allocation of net income. The consolidated statement of income attributes net income or loss to both the controlling interest and the non-controlling interest. Statement of changes in equity. Changes in non-controlling interest during the period are shown in a separate column or section reflecting contributions, distributions, or changes in ownership percentage. Huh. Okay, well, this is the main words that I was looking for. And it says that it should be reflected separate from the parent's equity. This would be so much easier with Google AI search. Oh, man. Gosh. I'll do another DuckDuckGo search. Actually, the way I'll do it is duplicate that page and go back. There. I think I saw one up here. Deloitte. I want to use the DART, the accounting research tool. The Deloitte accounting research tool. Here's how we use cookies, decline all optional. Presentation. Just any codification. It's not just any codification, it's the... Nice one, Wakebreaker. Yeah. It's not just any codification, it's the codification. I wonder if they have a trademark on that, and if they'll, like, sue you if you, like, call something the codification. Should somebody create a company called The Codification and see if the FSC, if the FASB comes after them? The Financial Accounting Standards Board. LOL. I'll pull my chat back up here so I can keep my eye on it. Yeah, I was not expecting that comment. That was a good one. Presentation and disclosure. This is what I'm looking for. Separate presentation of consolidated net income and consolidated comprehensive income on the face of the consolidated financial statements. Or separate presentation. Additional detail must also be provided about the portion of each of these totals. Each of the presentation and disclosure requirements summarized above ultimately arises from the desire to clearly articulate for users of financial statements how changes in a reporting entity's net assets affect the parent and non-controlling interest holders. While ASC 810-10 provides extensive presentation and disclosure guidance aimed at clearly depicting a non-controlling interest holder's claim on the net assets, net income, and comprehensive income of a consolidated subsidiary, no such presentation and disclosure requirements exist for the consolidated statement of cash flows. Well, right now I'm talking about the the parent count, no, let's see. Clearly depicting a non-controlling interest holder's claim on the profit and loss statement, but you don't have to present all that on the cash flow statement. Redeemable non-controlling interests remain subject to disclosure and reconciliation requirements of this rule, as well as SEC rules, even if such interests are classified in the temporary equity section of the reporting entity's balance sheet. Solely for study, training, and research, not for commercial. Okay. Zero pages. That's all right. Oh, here we go. That's what I was just looking at, I thought. Balance sheet presentation. No, it's not what I was just looking at. Nice, got some more information here. The general premise of a non-controlling interest is balance sheet focused. Yep, that's where we're at right now. Non-controlling interests have the following two characteristics. They are equity interests, which is to say they must be classified in equity, although they may include equity interests classified in temporary equity. They represent the portion of a subsidiary's equity that is not attributable to its parent. The first characteristic is addressed by the requirement in such and such rule that non-controlling interests be limited to instruments. Non-controlling interests be limited to instruments classified in equity. The second characteristic is reflected in the presentation requirements of this rule, which prescribe that a reporting entity should clearly label and present the non-controlling interest in the equity section of the balance sheet, but separately from the parent's equity. Non-controlling interests classified in temporary equity should be presented separately. However, if non-controlling interests classified in temporary equity subsequently become no longer redeemable, they should be reclassified into permanent equity on a prospective basis because classification in temporary equity would no longer be appropriate. See Chapter 9 for discussion of considerations related to non-controlling interests classified in temporary equity. And then there's an example. Yep. So basically everything that I've found says that the generally accepted accounting principles do not want me to lump these two line items together the way I want to. And here I am back to where I started before that nice little interesting accounting research. Well, that's better at least, like that. If we do or would those be better as an N dash? Insert special character EN. There it is. Is that it? No, that's not it. Dash. Here we go. N dash. Yeah, that's the one I want. N dash. EN. As in the letter N. It is the width of a capital N. It is the same width as that one right there. Oh, that actually is really helpful now. Now that I've read all that information, see, I wanted to just lump the non-controlling interest with the treasury stock. Wait a second. I still have not quite solved the riddle of whether or not I would be able to do something like that. But there's all those, everything I was reading was said, yes, you have to keep it separate. Do not lump it in with anything. Show it separately. Show it separately. But now I'm going to look up about the treasury stock. Difference between treasury stock and non-controlling interest. Treasury stock is included in computing the return on equity, so it affects like different measurements that they use. What is treasury stock? It's a stock that has to do with voting rights, I think. A treasury stock or reacquired stock is stock which is bought back by the issuing company, reducing the amount of Oh no, it's just repurchased stock. So it's just stock that's owned by the company, reducing the amount of outstanding stock on the open market. This is a stock repurchase. But these guys have negative treasury stock, right? Or am I missing something? Here it is. Common stock, no par value, 1 million shares out authorized, 906,500 shares issued, and 906,000. I don't think that dollar sign is meant to be there. I think that's just supposed to be a number. Or maybe they put it in there just to confuse people. 906,500 shares issued and 906,500 shares outstanding. See, zero. Those are that's just people, somebody somewhere owns those. Additional paid in capital. Retained earnings. Treasury stock. 52,270 shares at $2.52 per share. So now we really are digging deeper and finding out more. Things that a lot of stuff that I look at it right away when I look at it, I know what it means. But this particular bit about 52,270 shares at $2.52 per share is, this exceeds my natural ability to just look at it and know what it means. I have to spend a minute examining this and thinking about it, and got to get out a calculator. So many, Wakebreaker says, so many shell companies involved in this craziness. BAM, Fortress Management, Fortune Law, Legally Mine, and more. Yeah, a lot of shell companies. And from what I can tell, they don't, none of these shell companies have any like assets or money, or large amounts of wealth. I think these shell companies, I guess I shouldn't say any, they probably have assets, but they do not seem to have a lot of assets. They seem to be mostly just kind of just layers. Now, all that being said, treasury stock is a thing. It's okay. It's not illegal to issue treasury stock. And I'm just digging into this to really make sure that I can explain to myself what this is about and what it means. And this is the fun and challenging part of financial analysis. This is where some people just get frustrated and say, I don't know what this is about. But for me, or actually more commonly, people say, like, oh, yeah, 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 I know what that's about. And they'll start talking and talking and talking without taking the time to slow down and really think about it. That's called obfuscation. The dad, Daniel McNeff, seems sus. Maybe the apple didn't fall so far from the tree in this case. And I'm really interested to know more about their family history. And maybe like what part of Utah this family is from. And maybe if they have other family friends or other family relations who have a history of fraudulent contract breaking and contract abuse. Those are questions I have. I actually have a calculator. I'm going to grab my calculator. I had it out earlier. That's okay. I'll just use this one. Where is it? Got it here. So we're saying 52,270 shares at $2.52 per share. 131.70, 131,720.4. Okay. So that's just that number right there is the same thing as that number. How does it affect total net worth? Is it positive or negative of an impact? Is this what I have in my spreadsheets? Which year is this? 2025 and 2024. There's that 131,708. And then the 70,026 is over here. But yeah, there's the retained earnings and the retained earnings. The columns are backwards, so it makes it confusing to look at this stuff. Even just trying to double check and make sure the numbers are right. But I'm just looking and making sure that I've got it all spelled out the same way they do, like in terms of parentheses, because sometimes I change the parentheses on some of my numbers. But no, this is all the same. So by hovering or by highlighting with the cursor on the spreadsheet, then I can see the sum down in the bottom. So the net worth would be 489,000, but it's less than that because of the treasury stock. So that's net worth, which does not belong to the company. I'm just trying to understand, is treasury stock usually positive or negative? I think that's what I'm trying to make sense of. Check it out on Wikipedia. Junies says the dad has been fined, censored, etc., and been in trouble several times. The Dupa says Canada cheated. And Junie repeats the comment there. So that's helpful to hear and consistent with what I've been hearing, but maybe I hadn't heard it quite in that amount of detail of him being censored and stuff. I just don't want to say too much about Utah culture with regard to this family, the McNeffs. But I've had, okay, so the one person I've ever met or known who talks exactly the same way that Ammon McNeff talks is a guy who came from a family with 12 brothers. Also, I don't know if anyone has pointed this out already, but the way Ammon McNeff speaks, it's reminiscent of Bernie Madoff. Well, anyway, this guy that I know from around here in Utah who just talks just exactly the same way Ammon McNeff talks. He's the only guy that I've ever personally known who ended up going to federal prison for committing fraud. And he came from a family of 12. Now that may just be a coincidence. But there are some similarities there. And so here in Utah, there are certain families that are known for committing fraud. Junie says, this is good to know. I thought they acted broke. Yeah, to me, these guys are broke. To me, and I'm just digging more into that, but to me, they have a whole bunch of cash, which they took from other people as a deposit, and now they've promised to provide goods and services to those people. But in terms of their actual own resources, they don't have any. They're just using other people's deposits, basically. That's what I've come up with so far. Stock repurchases are used as a tax efficient method to put cash into shareholders' hands rather than paying dividends. For jurisdictions that treat capital gains favorably. But I want to see what it looks like. Maybe images. Let's see, images. Here, this one. How is treasury stock shown? Balance sheet as contra account. 2 ways you would show it in a balance sheet. Equity stock is like however much. What is that? 100,000 looks like. Retained earnings 50,000. APC 20,000. So they had 170,000, and then okay, yeah, so that's right. The treasury stock shows up as a negative value and reduces the amount of total equity. The other way you would show it is exactly the same way. You just move it up higher. Here's another example. Treasury stock, and it shows the cost, and it's a negative value. To shareholders of the Coca-Cola Company, these must be figures in millions or billions or trillions or something. So what does that actually mean, this treasury stock? What does that really represent? Oh, 7 kids? I thought it was 8 kids. I thought it was 7 siblings in addition to himself. I thought each of the 8 kids has 7 siblings. BJC live videos I just heard about 12 or 15 hours ago in the chat earlier today. That I just figured out how to do chat, so I'm just so excited about being able to talk to people here with chat. I barely got it working. But yeah, I just had barely heard about BJC live videos. I'll put that here for anyone else who's watching. youtube.com/@BJC live show, right? I think that's it. BJC live show. Pretty sure that's it. If you have extra time and interested in, we lost a message from Wakebreaker. It's good to know. I'm not sure. I think I missed that comment. But CBJC live videos. If you have extra time, interested in how they've been doing business for years. Yes. Also, if you guys have any hype points, BJC Live has a video that she's trying to hype right now. And so I went and hyped it. Let me see if I can pull this all this up. Let's see here. Here. youtube.com/@BJC live show. She's a corporate attorney. I was thinking, because she talks like she's awfully dang freaking smart. Okay, so she did a live stream that's like 18 hours or something. No, like 8 hours. No, like 6 hours or something. But in that live stream, this one right here, in this live stream, the most recent live stream from 12 hours ago, she asked everybody to hype, not this one, but this one, the one where it says sued his own dad. And so what I've done is I've gone into this video and
let me actually pull up the Utah Secretary of State and show y'all there.
I had never hyped a video before.
If you've been thinking about...
That was my first time hyping a video, but I went in and hyped it. And then I added, oh yeah, see, hype. And then I went in also to, like, I don't want to completely bombard the comment section, but the more comments I make, it helps support the video. So I went into the sub comment section here of a comment and just made a bunch of comments in there as well. And then just doing what I can to support that video.
Getting Pocket, this is your last chance to save 45%.
Actually
at the tap of
an ad.
so you know where I'm getting it from.
So this is the one. Bricks and Minifigs CEO sued his own dad. And BJC Live Show is trying to hype this particular video. Cool. Yeah, thank you for mentioning everybody about the BJC Live Show. That is super, super helpful. I did not know about that. I've watched half of like 4 of her videos, and I'm going to keep watching them more soon. Oh, nice. 8 kids, 7 siblings. The only reason I know that is because I come from a family where I have 4 siblings, but that means I'm one of 5 siblings. If she could see my work. Hey, thanks. That would be cool, Junie. I think right now, the person who I would like to work with and get in contact with is someone who's not so much in the public spotlight, but basically doing really similar stuff. And that's a guy named Patrick Silva. So I'm going to try to reach out to him first. Also, he doesn't have such a big following, so it'd be easier for me to get in touch with him anyway. But I'll show you that guy's. I'll show you one of his videos that I like. Let's see. Patrick Silva Law. This guy. And then the video that I like of his, not the Tiger Woods one. What is it? Oh, there it is. The Nun. Okay, this one. Am I free to leave? This one right here. Am I free to leave? So that's the video that I would recommend of Patrick Silva Law. And I'll give you guys
because now you're going to establish
a link on that here. This video is not related to the Reckless Ben situation at all. It's just a good civil rights video. So if anyone's interested in checking that out, but this is the guy that I'm going to possibly try to get in touch with before I would try to reach out to someone who's got such a big audience. I'm trying to keep my audience small right now. Because I want to be able to read comments, respond to comments, find out information from other people without it being too much of a fire hose. Oh, and her web is detailed. BJC Live is so good. Today's 5-hour stream about John. That's the one I was watching where I learned to hype that one video. Yeah, so I'm still working on watching the rest of that one, but I've started getting into it. So what does this treasury stock actually mean? Sometimes it's helpful to me to write stuff down on a piece of paper, and that's what I'll do right now. So what it means is that they had, in 2021, at the end of the year, the company itself had $129,000. We'll call it $130,000. We'll round up because it's 129.5 rounds up to 130. So they had $130,000 of equity, but that was not affected by the issuance of the treasury stock. The treasury stock had already been issued previously. Ooh, I might be able to go back in my spreads and see when it was issued. This one. Yep, there it is. Nice. All right. So this is where I'll really be able to figure out what happened. There. Right here is where they first issued treasury stock. So here is where we'll actually be able to figure out what treasury stock really means. And even if we understand what treasury stock means in the academic sense of being able to recite a textbook definition, sometimes we still have to take a little bit of time to process cognitively what is actually happening in the balance sheet. So at year-end 2019, and I'm taking written notes here just to help myself to understand what I'm looking at. The company had total equity of $170,000. Retained earnings between 2019 and 2020 increased because they had net income that year. They did not lose money, they gained money that year. So if we go up and look at income, see that income of $12,000, $13,000 in 2020 and $48,000 in 2019. So they were still making money up until 2020. And that's why the retained earnings increased by about $12,000, $13,000 right there. I'll just do a calculation here. This minus that. Difference of $13,000. Yeah, just the same as above. So if they had net income of $13,000 this year in 2020 here, then their total equity should increase by $13,000. However, instead it decreased by this much compared to that much. $27,000 decrease. Paid in capital, retained earnings. Yeah, which is just, so when they issued the treasury stock, it corresponds to a decrease in shareholder equity. And the times when they issued that treasury stock were in 2020, 2021, and then not again until 2025. There they issued some as well. Man, I'm still kind of struggling to really see exactly how this treasury stock really fits into the puzzle. Junie says, I've been watching Valhalla Awaits and several other attorneys following this case. Okay, I've not seen Valhalla Awaits at all, but I've heard Valhalla Awaits mentioned on that CJB channel, and I've seen Valhalla Awaits leaving comments and stuff in some places. So these seem like the most technically detailed coverage, because there's a lot of coverage out there and also by a lot of attorneys, but they're not providing high level detail and a lot of them are not really providing you very much in the way of useful, high quality information. Some of them are, many of them are, but some of them they just keep giving the same. They're just telling all the news information about what happened that everybody already knows, and then they'll like read the most easily accessible public documents, and but some of them are not providing really the most helpful analysis. And yeah, the BJC and Valhalla Awaits sounds like, I know the BJC live show is, and then Valhalla Awaits sounds like is also getting into the details. And then on top of the treasury stock, there's also a non-controlling interest in 2021. None of these are major amounts of dollars, but they're right at a critical time when the company goes from having a positive net worth to a negative net worth, and has retained earnings go from 23,000 to negative 441,000 in 2022. Oh, that's the year they had a $450,000 net loss. 451,000 net loss in 2022. But that does not explain the treasury stock. The company itself buys the treasury stock from the stockholders. I know that. Okay, let's think of it as a publicly traded company. That makes it a lot easier to understand the treasury stock. So if it's a publicly traded company, like let's say, I'm going to think of a company that buys treasury stock a lot. Warren Buffett does. He's big on treasury stock. I'm trying to think. There's a classic example that's always mentioned for treasury stock. Big companies which buy treasury stock. Man, this would be so much easier with AI. Which are the classic examples of big companies which buy treasury stock? Here we go. 5 companies that constantly buy back their own shares. Oh, man. Dude. Come on, man. What the heck? It's all blurred out. Is it Microsoft? I'm trying to remember. What? Here we go. Here we go. 15 companies that are buying them back. ConocoPhillips, Walmart, Cigna, Comcast, Chevron, Nvidia, Marathon Petroleum, never heard of them. Lowe's, Procter & Gamble. Click to continue reading. What? Where's the other 5? Exxon. Oh my gosh. You gotta be kidding me. Microsoft, I thought that might be one of them. Okay, I'm just gonna use Microsoft as an example. I've entered the clickbait zone, thanks to Yahoo. That's the difference. Yahoo. What's the difference between Yahoo and Google? They both kind of came out at the same time. Yahoo used the clickbait model, whereas Google used the helpful information model. So we're going to take an example of Microsoft. In fact, I'll put it up here so we can I'll just create a new sheet here. View, no grid lines, thank you. I don't really actually have anything to draw or to say about it, or to put on the screen about it, but maybe this will be easier to explain. So Microsoft, they have whatever value they have, that they're worth, let's just say at a given time they were worth $1 billion. And they have all this outstanding stock that's out there in the public, people who own part of Microsoft. Well, when Microsoft purchases that stock back from the public, then there's less stock outstanding. And what that does is it makes the stock that the people who still own the stock, whatever stock is owned, is more valuable. So it makes the common shares more valuable. But that's when it's a publicly traded company. And why would they need to do that when they're just privately owned? And it sounds like, from what I've read and what I've looked at today, that the primary reason for doing that is just simply to reduce their capital gains taxes. It's just if they do earn money and they post profits, then this would reduce their tax liability. However, these guys have posted losses for the last several years, so they don't really have that much that they have to pay in taxes. It's not like they have huge tax liabilities, and yet they've still continued to purchase back more of the common shares of stock since then. They've received additional paid-in capital in 2022. This may have come from I think Ammon McNeff. I think I saw in some public records that he had taken out a second mortgage on his home, but I don't remember which year that was. I know that I saw that. I don't think I saw that. I know that I saw that. I have that saved, but it's not redacted, so I'm not going to share anything like that. But I can say that it appears that somebody obviously put in about $220,000 worth of capital in 2022. What that means probably is that they were running low on cash, but it could also just mean that somebody invested into the company. But yeah, that's when they had $442,000, $451,000 net loss. Anyway, that's when they had a big loss that year too. The story is starting to make a little bit more sense to me, but what I'm going to do for now, you guys, is I'm going to leave it at that, and I'm going to leave it as I still want to study this equity section of the balance sheet, and I'm going to spend several days. I don't have several days. I got to put this out. I'll have to follow up on it in the future. The key takeaway here, if we kind of zoom out, so I've been looking at this with a magnifying glass. Now I'm going to zoom out and look at it in the context of the whole the whole write-up. The company's primary goal during the past several years appears to have been to grow as quickly as possible without apparent concern for fully capitalizing the company's growth. BAM Franchising sold 259 franchise agreement contracts between December 2021 and December 2025, which is a 4-year period, according to the company. During this time period, the company's retained earnings decreased from negative $442,000 to negative $819,000. Yeah, that's the retained earnings. And net worth during the same period decreased from negative $182,000 to negative $621,000. See, but I'm mostly looking at these results, but I've added in this extra column. Normally what I would do for the financial analysis is I would spend like 3 or 4 or 5 days trying to figure out exactly what happened with this part of the balance sheet. I'm just going to leave it and move on for now. Okay, so my next paragraph is Aura Public Relations Crisis, and that relates to up above. They can, as long as BAM Franchising can keep attracting new franchisees, they will have adequate cash for operations. However, what would happen if BAM stopped adding new franchisees? What if the company runs into a public image PR crisis, causing prospective franchisees to become skeptical? Let's take that out. However, what would happen if BAM stopped adding new franchisees? If the company were to have strong... Yeah, maybe I'll leave it in there. If the company were to have strong underlying fundamentals, it would be able to weather a storm. But this company has weak fundamentals. Its operational capital is currently derived from sales and not from income. This calls into question the company's ability to weather a market downturn, a natural disaster, or a disease epidemic, or a public relations crisis. Yeah. So I kind of want to take this sentence out and move it down there. Yeah, the current situation seems catastrophic. Absolutely. I'm trying to keep that mostly out of my analysis and only just keep that as a very tangential thing because I want to focus on the financial condition as of December 31st, 2025. And then the current fiasco is with regard to the financials. It's kind of I want to give it its proper place as keeping it kind of down here at the bottom. BAM Franchising is currently involved in a high-profile public relations scandal. Calling into serious question the basic integrity of the leadership team. Calling the leadership team. Now we're going to make this more active construction. So this is just basic writing, basic editing. So instead of calling into serious question the basic integrity of the leadership team, actually what it is calling the leadership team's integrity into question. Calling the leadership team's integrity into serious question. So I just reconstructed the second half of that sentence to make it more active and less passive. Instead of being involved in, they're going to be facing. So that's more active construction. BAM Franchising is currently facing a high-profile public relations scandal, calling the leadership team's integrity into serious question. However, some say their local store is doing okay. I believe that. When more time has gone by, it will be interesting to see the graph. The letter from their father told me all I need to know. I don't know about I haven't heard about the letter from their father, but that I'll be interested to see that. Maybe Valhalla Awaits has that. Yeah, it says their local store is doing okay for sure. There is a lot of variability between each of the individual franchises. So there could be some stores that are doing just fine. There could be some stores that are receiving like extra community support because everyone understands what they're going through. Personally, if I were a franchisee, and especially if I was one of these people who had given a deposit, I would feel betrayed especially by this guy Ammon McNeff, and also by Matt McNeff, but also there's the whole leadership team there. So remember, the guy that actually brought the McNeffs on board is a guy named Reed Brimhall. Are you guys familiar with the names of the management team? Let me show you this. In the financial disclosure document, in the notes to this is just right in the financial statements. This is not. Oh, maybe it's not. It might be actually the beginning of the. Let me see. It's either in the notes of the financial statement or it's in actually the FDD document. Leadership team I'm looking for. Here, do this search. Anyway, it's right here. I'll show you. Business experience, that's what it is, not leadership team. Business experience. There we go. So this is page 12 of the franchise disclosure document. Ammon McNeff, CEO and President. Matthew McNeff, COO. Reed Brimhall, CFO. Now Darren Hicks, oh no, there was another one. There was someone else who was on the leadership team and then was no longer on the leadership team after a while. But it was not Darren Hicks. Anyway, Darren Hicks, Chief Development Officer, Fractional Chief Development Officer. Mike Wu, Chief Technology Officer. So Reed Brimhall has been with Bricks and Minifigs the longest, before the McNeffs. And Reed Brimhall has served as Senior Executive Vice President and Chief Financial Officer for Sensi Inc. in Meridian, Idaho since January 2015. Look at this. That's Reed Brimhall. So, and he's the CFO, so he's the guy who's probably in charge of making the financial statements as well. And I have not heard anybody mention that guy's name, not once. And he's been working with Sensi. Do you guys know about Sensi? Do you guys know what Sensi is? I heard a new phrase on that CJB live show. She said MLM, Mormon level marketing. Sensi Inc. in Meridian, Idaho. The letter from the father told me all I needed to know as an experienced person. Right. It's on the video you hyped, the Sue Dad. Okay, that's where I'll find the letter. So once I finish watching the hyped video, so that's also something I'm working on. He says they couldn't run one store. Yeah, no one's ever heard of Brimhall or Sensi. But it's right here in the main document. And I have no idea what Reed Brimhall's overall role in all of this is either. I've known a lot of accountants over the years, and there's all types. And even with everything that I'm seeing in what I've analyzed so far with the financial statements, I have no sense whatsoever of like Reed Brimhall's personal integrity. I just don't know. He may have just been duped this whole time by the McNeffs. It is possible that Reed Brimhall is a very honest, nice guy. I really don't know. There are many different types of relationships between accountants and CEOs. But I'll be trying to find out more about that. Darren Hicks is going to be a sales guy. This is the sales. And then Mike Wu, Chief Technology Officer. I have no idea, what his level of involvement is. I can tell you this, whenever he came on board, because he started October 2023. Let's give Mike Wu a different color. So he started in October 23, so it was just a mess. I guarantee you. When this guy came, this guy has some interesting stories to tell, but he's not allowed to speak. But he inherited a ginormous stinking mess, I can guarantee it. And he started trying to make sense of it and create an actual computer program where the people at the stores could log in to the point of sale system and put their information into there and actually have it come out the other end and have it actually be meaningful information, which he could send to Reed Brimhall, right? But I guarantee you when he got there, it was a mess, and he's been trying to make sense of it. The question is, did he get it straightened out, or is it still a big mess? I have no idea. Some associates are people who previously sued them, and now they're on the team? What? I sue Ammon McNeff, and Ammon McNeff says, okay, it's true, I stole $20,000 worth of stuff from you, and we settled, and now I want to hire you. Actually, no, instead of giving you $20,000, come and work for me, and come and work on our team, and we'll make you part of the team. That's wild to think about. What is that guy's name? I have it written down here in my notes. In one of my pages of notes. I think it's over here. David Gibb. David Gibb. The lawsuit was dismissed in February 2021, but in the notes to the financial statements from 2020, it is mentioned actually as a little side note. Let me try and show you where that is. I know I've got to go all the way down to the financials for this. Okay, there's 2024, 2023. We're looking for the 2020s. 2023, 2022. Keep scrolling down. Oh, that's it. There's no more. Okay, so I have to go to an earlier version of the financial disclosure document. This is a 2024 one. I also have a 2022, actually. Let's see. Yeah, here we go. This will have it. (2018, 2019). Operating leases, related party transactions, property and equipment, change in accounting method. The corporation has a 50% interest in BMF Vancouver LLC. Oh, that's just one of the stores. I'm trying to find the note here where it refers to the lawsuit with David Gibb. Note 8. Maybe it's in the notes to the 2019 report. Let's see. Nature of operations, significant accounting policies. I know I saw something about a lawsuit, but it might have been a different lawsuit then. In the notes to one of the financial statements. I'm looking at 2024 FDD. I already looked at this one. Wesley Chapel. Yeah, it's not here, but I will show you this. Look, up in the notes. You find interesting things in the notes to the financial statements. After the retained earnings, after the cash flow statement. Information about their different, the different stores that they owned at the time period. Southington, Wesley Chapel, and Vancouver. I believe it's the Wesley Chapel owner who's come out and done some interviews talking about his personal experience with the McNeffs. I'm telling you, there's a note in here about a lawsuit. What is this? We want 2022. Yeah. Deferred revenue, notes payable, leases. Sale of business interests. Oh, that's an interesting note. Hey, that's one to look for, though. Provision for income tax and deferred income tax. Subsequent events. No, I'm not seeing a note about a lawsuit there either. But that is an interesting note right here. On February 2nd, in fact, I'm going to put that on my timeline. On February 22nd, the company sold Banff Salem to an outside party. So, according to the audited financial statements, the Salem store was sold on February 22nd, 2023. The purchase price was $65,000, and the transaction resulted in a gain of $42,000. So that means that they had purchased that store for a cost of the difference between $42,619 and $65,000. Oh, hey, hey Dan. Not here to argue facts. Thanks for saying hi. Yeah, I'd missed some people in Australia the other day, so I jumped in early today to say hello to Australia. I just want to save this note right here. I'm going to print it just to have it handy because I don't want to forget that. I want to bookmark it permanently. What is that? Oh, crap. Page 286. No. Here, this one. Yeah, 286. I'm just going to make a note to myself to keep looking for that information. Note to self. Because that's something I need to have cataloged anyway, is that I need to find the information about settled lawsuit. It's a note in one of the financial statements. And this one I printed has this information. February 2023. Oh yeah, I got it here on my other timeline as well. So I'd already written that down too. That's good. A lawsuit with David Gibb was dismissed in February 2021. That's another timeline note. And then I will continue looking for and find later the actual note where it identifies in the financial statements that there was a pending lawsuit, but it got settled and it's no longer an issue. It could have been more recently. I was thinking it was back in 2020 or 2022, but what if it was on the 2025 statements? That's right here. Oh, I found it. All right. Hey, I found it. Okay. So it was actually in the 2025 audited statement that there's a note about a lawsuit. So clearly this does not relate to that previous lawsuit with Mr. Gibb. But here when we Gosh, they got a lot of notes in that 2025 statement. So here we start note 1, accounting stuff, basis of presentation, consolidation, estimates, cash. It's all just accounting stuff. This could be useful, and I've not read through everything in here, but every now and then you'll find some actually useful information. Like the company has recorded an allowance for doubtful accounts of $112,000. Ooh, but $0 as of 2025. That's interesting. Stuff about the cash deposits, but I mean, it's all just usually mostly just kind of accounting stuff. Advertising expenses. However, then, as you get through all this stuff, related party, during the year the company purchased 20,000 shares of common stock owned by a shareholder. The company paid $20,000 and signed a note agreement. So that's also a pretty interesting note. That's kind of it's pretty detailed. It does not imply anything criminal. It's just good information. It tells us more about what the story. Leases. And then here, note 10, litigation. The company is a defendant in certain legal actions and pending actions. The ultimate liability that might result from the resolution of the above matters is not presently determinable. Management is of the opinion that the final outcome of the cases will not have an adverse effect on the financial statements. Note 11, subsequent to the balance sheet date, the company settled a legal dispute. The company agreed to pay the sum of $18,000, which is accrued on the financial statements. So sometime in early 2026, the company paid $18,000 to settle a lawsuit. Because it would have been after December of 2025. So it would have been sometime early this year. Subsequent to the balance sheet date. That means after. I'm going to print this one also. Yo. What page is this? 319. Seems like a waste of paper to leave the bottom half like that. I'll use it to make drawings. Google search throws me off. How so? Junie Shu. Now, what about 2024? Was there also litigation notes in the 2024 audited statement? There's another sale of one of their stores. Litigation, yeah. So in 2024, additionally, they had active litigation. The company is a defendant in certain legal actions and pending actions. The ultimate liability, yada yada. So I'm going to print both of these 2 pages. I'm going to print 347 and 348. I'll show you guys how to save space. 347, 348. More settings. Pages per sheet 2. Bam! Look at this. Now I got both of those pages on one sheet. deferred tax assets because of so much deferred revenue, or is it because of losses? I would have to dig deep to really deeply understand these deferred tax assets. We got to get an accountant on the case. That's what we need. Ooh, I have a neighbor. Who is actually a forensic accountant who specializes in exposing multi-level marketing fraud. He's retired, but that's what he used to do. So I'll have to talk to him. The only problem, he's kind of difficult to talk to because he's an accountant. Just kidding. Just joking. Let's see. Hey, bud, here we are again. Can I say, hey, always glad to see you, Alan. I don't go live too often and not for too long. I just wanted to say hi to people in Australia because I had missed them. I'd missed some comments yesterday, and I finally figured out how to use the chat. I'd missed some chat yesterday. I finally figured out how to use the chat. So I just started at like 2 a.m. in Utah time, but I just keep kind of coming back to some of these different videos and keep watching them. So I'm doing the same thing. I keep watching the BJC. I just found out about that from the chat people. I'm doing the same things as you guys. When I'm not sitting here actually working on the analysis. And when I'm not out doing other things too, but I'm very much focused on this stuff right now. On this bricks and minifigs financial analysis. Later in the month, I'll have to focus on other things, and I'll come back and do more. Yes, so the page I just printed for myself, the 2 pages on one sheet. So for the timeline, this gives us also note 8, the sale of the Canby store. And the Canby store is one of the original 2 stores that ever existed, even before, back with the original owners. So Canby store sold on February 2nd, 2024. And then note number 10 is that as of the end of the year, as of December 31st, 2024, the company is a defendant in certain legal actions. And then if we were to scroll way back up to 2025, they paid $18,000 to settle some legal action. But they were also still a defendant in other legal action. That's as of December 2025. And I have a different set of notes. I want to make sure I have that Canby store here. I'm keeping a written piece of paper here where I've got my own little timeline. Banff Salem was sold in 2023, but Banff Canby was sold in February 2024. Okay. No, he doesn't know anything about the McNeff. My neighbor, who's an accountant, does not know anything about the McNeff stuff. I highly doubt it. He does not seem like the kind of thing he would care about. But yeah, he is a forensic accountant, and there are other forensic accountants in the world. Maybe I'll try to. I'll be. Yeah, I might talk to him, but there are other accountants out there too. I'll try to get in contact with an accountant. If the company were to have strong underlying fundamentals, it would be able to weather a storm, but this company has weak fundamentals its operational capital is currently derived from sales and not from income. This calls into question the company's ability to weather a market downturn, a natural disaster, or a disease epidemic. I need some kind of transition word here. I guess I'll just do it like this. BAM Franchising is currently facing a high-profile public relations scandal which calls the leadership team's integrity into serious question. I don't need to make those comments. Leave those for I can make those kind of comments verbally, but I don't need to put those in writing. They know all kinds of lawyers, FBI, businessmen, and professionals. There are layers of abstraction within any kind of criminal enterprise. So typically the seller and the buyer, if it's a really like expensive stolen good, then they might not even know each other and they only know the middleman. And so I personally do not doubt that the FBI has different levels of infiltration by different types of criminal enterprises. And often they think they're just helping out the team. They don't really think of it as being criminal. They don't think of what they're doing as being wrong, as doing anything wrong. They're just violating the civil rights of innocent people and falsely accusing people of things that they didn't do. But that's okay. That's the way we do it. That's the way we've been doing it for a long time. So a lot of those people, they're only loosely connected and often through different intermediaries, and there are usually different layers of abstraction. So the different connections, they don't all necessarily know each other by name. But yes, I would say that lawyers, FBI, businessmen, and professionals they're all different. They have all different networks. Which is likely to deter potential franchisees which is likely to negatively impact the brand. Okay, well, I'll leave it like that for now for that one. Haha, the world is watching. Yes, the world is watching. Watching you, BAM. What may affect the viability, the profitability, the prospects, the viability, the profitability. Oh yeah, thank you. Yeah, cool. Yeah. Viability, profitability, prospects. The brand's long-term viability. Nice. Cool. Google algorithm pushing the word Lego and taking you to Lego enthusiast videos, thus hiding the financial corporate angle. That's it's also the who actually makes content on YouTube. I've seen not a lot. I've seen some civil rights, some lawyers covering civil rights issues. Audit the Audit, John Lang, the American Patriot. Those guys, I don't know that they're attorneys, but they're doing citizen journalism, covering the legal angle. And but I've never like been just like, you know, I get stuff, I'm on YouTube and then it'll tell me, hey, you should check out this, hey, you should check out that. Like, let's see. Like, just when I'm watching this video and it suggests all this stuff. CoffeeZilla, that was a good... CoffeeZilla has been helping out a lot. That's been some good coverage. That's the civil rights lawyer, you guys. That's John Bryan. Hey, there's me. But I don't ever see stuff in here. Oh, did you guys hear this? That Reckless Ben was defended at a city council meeting? I thought that was cool. Some people went to the city council and told them what they thought. But, and here's this guy, Patrick Silvalaw. But I haven't really gotten a whole bunch of stuff over here that says, hey, you should check out this accounting information. Let's see. Interesting accounting blog. What's it like getting a job in accounting? In the Clear Accounting. So here's a guy. So these are the types of people that would be able to do a much better job explaining everything even than I can, possibly. CPA blog. Yep, accountants are cooler than you think. So anyway, I'll keep looking into all those guys. Yeah, civil rights lawyer is awesome. Very useful, and he's slow. He talks slowly, and I'm a fast talking kind of a person. Quickly, I say, oh, the people are in a hurry. They need all the information. I got to get it to them quick and be on my way. And the civil rights lawyer, he goes through and he explains the information, and he really describes what we need to understand about the events. And that slow cadence is something that is so helpful for me to learn from. I just tend to go, I just tend to talk very quickly. I'm trying to learn to be a little bit more at ease. So yeah, there is a tendency for the algorithm to get us into the Lego community, guys, but I don't know that I haven't seen any accountants that are really digging into this topic yet. DUI guy, I'm not familiar with DUI guy. I don't know that one. I'll add that to my list here. Let's see. DUI guy. Cool. Thanks, Dan. Thanks for that suggestion of the DUI guy. I'll check him out. Net worth during the same period decreased from negative 182,000 and negative 621,000. That's the equity that I spent a lot of time looking at earlier. I would love to get an accountant to help me to really describe why they were purchasing common stock during that period. The company itself was purchasing back stock from whom. Just kind of being able to explain what that's about, and the non-controlling interest as well. Or a public relations crisis, good. I got that paragraph in there. Data tables. Results from the financial statements are presented in summary tables. Control S to save as I go. In all cases, financial results correlate strongly to number of stores. For example, Financial fee income increased from $375,000 to $2.7 million in 4 years, which correlates to an increase in annual store openings from 15 to 67. The total number of open stores increased from 56 at 12/31/22 to 224 at 12/31/25. I think we'll do at oh yeah, do it like that. An increase of 168 stores, resulting in a 3x increase over a 3-year period. Unopened stores, unearned revenue, those go together. Stores opened this year, franchise fees, those go together. Great. Total stores at year end, royalty fees, those go together. Advertising fees, advertising expense, professional fees. Corporate owned stores, inventory, product sales, cost of goods, occupancy. Unearned revenue of $2.7 million at 12/31/25 represents cash deposits from franchisees who have not yet held their grand openings. This figure is in line with the company's aggressive growth and represents significant unfulfilled commitments. Franchise fees, also $2.7 million. Franchise fees of $2.7 million. Reflect the successful grand opening of 67 stores during the year 2025. But were those actually fees were actually received the previous year? Let's see. Nope, not all of it. At the end of 2020, oh no, yep. For the year 2025. So during the year 2025, they opened 67 stores successfully, and they recognized $2.7 million in income. But a lot of that, not all of it, but a lot of that was income that had been unearned revenue in 2024. It was cash they received during 2024. And then those people had their grand opening in 2025. And so that unearned revenue was recognized or realized as income in 2025. And then at the end of 2025, they have the exact same amount in deposits from people whose stores they're trying to open in 2026. Franchise fees of $2.7 million reflect the successful grand opening of 67 stores during the year 2025. Successful grand opening. And this income, a portion of this income represents monies collected during the prior year. Okay, so that sentence just summarizes what I was just saying about the fact that this unearned revenue is actually, all of that unearned revenue ended up being claimed as revenue here. And then a little bit extra, they also got a little bit of extra people that signed up and closed their store during the year. And then now they've got all this unearned revenue. They got to close that many stores in 2026. Or close, not close, open. I said close. Close the deal, I was thinking. Close the deal, close the loan, close the deal. No. Opens, they already closed the deal. They closed the contract. They got it. They sold the contract. And then they delivered in 2025 on 67 stores. Now they have 66 more stores, or yeah, I think that's right, that they got to deliver on over here in 2026. But I just said all that in this one sentence. A portion of this income represents monies collected, deposits collected during the prior year. Poor franchisees who bought into this mess. I think some of them will just do just fine, and I think some of them. I think the ones who already have their store up and running and have a good solid customer base, I think they'll be fine. Maybe not just. I think they'll still have a hard time, but I think they'll make it through. But I think the people who will have the most difficult time is the people who have just recently signed contracts. They've just recently made a $40,000 deposit to the parent company, to the franchisor. And now the franchisor is the parent company. I do not see this company doing anything other than going bankrupt. But who knows? But I can't see that the parent company is going to make it through all this. Royalty fees of $5.2 million for 2025 increased by $1.9 million over royalties of $3.4 million during 2024. This is in line with general growth. This is in line with growth. Total number, and the total number of open stores increased by 43% during the same time period. What does royalty fees compare to? I think royalty fees compares to total expense. I'm just showing revenues here. We have advertising expense and professional fees, but really, when we're comparing with the royalty fees, I think I wonder if there's an expense that tracks with royalty fees at all. Compensation expenses. Look at that. Hey, look at that. I just imagined in my mind, I was like, there's got to be an expense which tracks almost identically with royalty fees. And look at this. Compensation expenses. Look at that. See? These are the little nuggets that I get all excited about. I just found it just now. Expenses should decrease. Percentage wise. Yeah, expenses, they should get more efficient with the more stores that they get. But total expenses as a total number should keep increasing. The more they grow, they should keep having more and more expenses, but the percentages, they should get more efficient as that happens. I'm very happy about this discovery. Oh, because I didn't have it here in my simplified sheet. Let's see, maybe here. There it is. Salaries. Enter. There. That's it. That's the one. Look at the symmetry here. And again, I'm adding parentheses. Well, I mentioned this way earlier. I don't know if I've mentioned it to current viewers, but I've been adding parentheses in places where people don't normally always see the parentheses, so that we can see that this is an expense and this is income. Look at this symmetry. Look at that symmetry right there. Is there any reason why they should not be able to keep their salaries to be less than the royalty fees that are coming in? I'm trying to think. Yeah, there is a reason. So these salaries, this compensation expenses also includes the salaries for the corporate owned stores. So even though we can see cost of goods, and the occupancy includes rent for the corporate. So if we were able to get the unconsolidated financial statements, then we could really see what the relationships are. Nonetheless, this is a big symmetry. This is helpful. Let's call this salaries. Salaries and wages. Royalty fee income. Franchise fee income. Anything we can do to make it easier to understand at a glance. See, advertising fees. Oh yeah, that's advertising fee income. And then advertising expense. Yeah. Professional fee expense. Corporate owned stores. So you could, UK from Alan in the so you just couldn't stay away any more than we can. Popped in because I thought it might be that way. Yeah, well, and for me, I'm trying to finish this analysis up, but I will definitely be continuing to. I've been the one I keep checking in on is the one that y'all already know about too. That channel with the detailed legal overview. This is the slow part of the investigation. Really digging through the numbers. Unearned revenue, franchise fee income. Unearned revenue of this much represents cash deposits from franchisees who have not yet held their grand openings. Royalty fees of this much is in line with growth. Compensation expense of 5.6 million. 5.6 million for 2025. Compensation expenses 5.6 million. Represent an increase of compensation expenses. An increase of 1.29 million. Of 1.29 million, which is, as a percentage, 30%. Compared with 4.3 I'm just going to say salaries. I think that'll be understood. I'm going to say salaries and wages. Salaries and wages. This is kind of detective work. People get interested in the detective work. It's teamwork. This is internet sleuthing. What we're doing is we're internet sleuthing together, and the people start getting to know each other. There's Discord servers also. I don't know if any of y'all are connected on any Discord servers or Reddit. There's also people connecting on Reddit. This is something that people really care about. Not everybody in the world cares about it, but a lot of people are really want to help keep moving the needle forward with the understanding the detective work here. Alan says, I think maybe these monetary problems for BAM may have started because of fragile bank account around the time of COVID. Yeah, and they clearly, something happened around 2000, what was it, 20? Let's see, or was it 2022? There was that year they had a big loss. Net income. There it is. So what, COVID was 2021, right? But what happened with their balance sheet during that same time period? Let's see. Oh, yep. So here's COVID, right? This is COVID, I think, is right here. No, 2021. Let's see, COVID-19. Yeah, it was 2020. Remember, COVID, it started in 2019 in China, but then everybody started catching it in 2020 and a little bit into 2021. This is COVID right here. And there was a lawsuit with the father around the same time. Not Lego crowd making this popular. Not Lego crowd making this popular. I'm not sure what that means. Not Lego crowd making this popular. Oh, it's not, this is not Lego. This is not about Legos. The Lego crowd is also following this, and they're interested, But the people who have really taken an interest, it's more about justice and fairness and trying to trying to help with the detective work. There was a lawsuit with the father around the time of COVID, and they're saying that the father said their store was not profitable. I don't know. I don't know about their store. I want to be able to highlight this with a lighter color than that. It's not going to stand out so much. There we go. That was the 12,943 is, I think, that was their income that year. So in 2020, that was COVID. They did have positive income. And what about their activities? How many stores were they opening during that time period? They closed a net of 3 stores, and they may have, I don't remember if they even closed 4 stores and opened 1, I think. And then in 2021 is when they really started growing, but not that much. They got franchise fees of $125,000 in 2021. They always, at the end of the year, they always had cash. That's one thing we'll always notice, is that they never, at the end of the year, had a negative cash position. It's all ages, politics. Legally Mine supposedly signed purchase agreements to buy several million worth of shares. Legally Mine signed purchase agreements. Yeah, but there's. I would love to. Shares which were repossessed. I don't know about what the actual say. So they might say the shares are worth millions of dollars, but the shares are not actually worth millions of dollars. The number of shares that was issued is 1 million shares total, I believe. And that information is in the documents. Let's see. Should be like in the, I think, the retained earnings statement. Changes in stockholders' equity. I call this the retained earnings statement. Let's see. No, doesn't say how many shares. Okay, I would have to dig even deeper to go back and find that where the exact number of outstanding shares is, but I believe they issued 1 million shares, and then the company retained like 70,000 shares, but they sold like 950,000 shares or 930,000 shares. And then the actual value of those shares, though, is not millions and millions of dollars. they might say it's worth millions of dollars, but those shares are worth not that much. The coverage is only talking about the lost Lego, not the in-depth background investigations. Not yet, anyway. Yeah, there's an interesting corollary. What was that letterhead? Which one? I don't know. There's a really interesting corollary here, Alan. With, I don't know if any of y'all followed the David. This was a grisly, gruesome true crime murder. A musician. I'll just pull up and show you. His name is D4VD. That's how he spelled it, David. And now this guy is, I think he's in prison now. I'm not sure, but there was a big time period where he was free and he had not gotten arrested or anything, but there was a major underground internet detective group providing research, sharing information, putting information on Reddit. This stuff. Okay, this guy. And see, so that's the girl that had a really grisly death. And so, but all the information was not really coming out public to everybody, but just the people who were really interested in digging around in it. There was a lot of internet sleuths. There's another, it's kind of like also Don't F with Cats. You guys know that one? Don't F with Cats. Hunting an Internet Killer. So that was another situation where there were a bunch of people on the internet that were interested in investigating it. But the letter, I don't know which letterhead it was, Dan, but it is the, that is with the financial disclosure document, whatever, where I was looking. There is a note. It might actually be in there, in the actual franchise disclosure document itself, and not in the financial statements. But somewhere I saw, I think it was one of their earlier financial statements. I think it was like 2022 or 2024 financial statements. Has the actual stock issuances, number of shares and everything. I'll have to put that into my spreads. I don't have that yet. Salaries and wages. Oh, Nancy Guthrie. Yeah, that's a name that I recognize. I've seen Nancy Guthrie, I think, in true crime investigations. Everything goes back to LM, but the coverage only. Yeah, Nancy Guthrie's. I'm interested in true crime, but only like certain ones really get me interested. This Reckless Ben and the Lego theft and the American Fork Police Department is close to home. It resonates with my own personal experiences. I'm interested. And I was looking around. I was like, well, how come nobody's given us the analysis of the financial statements? So I decided to jump in and help with that as well. 4.3. So I would say that salaries and wages, if we compare them and look at royalty fees, we get an interesting comparison there, but we have to remember that salaries and wages also include the corporate-owned store employees. These compensation expenses include wages, salaries. Wages are also salaries, but salaries are wages, but wages are not salaries, I believe. Wages? Can't we just call this wages? Because salaries, you only get a salary if you're not paid by the hour. But if you get a salary, that's still considered wages, I'm pretty sure. These compensation expenses, I'll still just call it salaries and wages. These compensation expenses include the wages of corporate employees as well as the wages of employees who work at corporate-owned stores. A separate breakdown of wages for the corporate, separate breakdown of corporate only wages is not presently available. Separate breakdown of corporate only wages is not present. Provide a useful comparison would serve as a useful comparison to total royalty fees. I don't know, I might take that sentence out. I think that sentence might just confuse people. Don't think I need this. Actual stores opened during the year is a critical metric for this company's performance. Franchise fees in 2025 of $2.7 million represent cash received from franchisees who held a grand opening that year. Held grand openings that year. This is an increase of 16% over the prior year and is, I don't know if that's actually true, if it's in line with general growth, because we're talking about 2025 compared to 2024. Let's take out that in line with general growth because I'm not positive on that. It would take extra thought, extra research, and I'm getting ready to finish up here. For example, I had some excuse me. I had some comments here from earlier that I was working on, which included some speculation, personal speculation, that recent high-profile litigation indicates a likelihood the company is overspending on legal fees. I have no evidence of that. In order to strong arm and pressure franchise owners. Well, indicates a likelihood means that I don't have any evidence. The whole fact that I said indicates a likelihood, that's called a qualifying statement. This is a qualifying statement. And so technically that means I'm not lying because I said indicates a likelihood. So I'm okay there. I've covered myself. However, I'm still just going to go ahead and remove this entire sentence because it's not very well founded. The dollar amount spent and observed increases are in line with the general growth curve. Yeah. Professional fees increased continually from about 250,000 in 22 to about 830,000 in 25. While a specific breakdown of professional fees is not currently available, professional fees typically include costs primarily associated with lawyers and accountants. And I'll leave my further comments about that to a later moment. More draft stuff about this unearned revenue, training, travel, cash and equivalents. Oh yeah. This table, I don't have any written comments underneath it. And then this one is about revenues. I've already covered this information elsewhere. You know what I'll do? I'm going to do save a copy. Before I delete all this stuff, Control-Shift-S. This is an important tip to remember. Version control. So I got my financials I've been working on. I'm going to start going through and really editing a lot. So I'm going to call this BAM Financial Analysis 2, year-end 2025. Save as, give it a new name. Now it's safe. Now I can do whatever I want. If I delete this stuff and later I'm like, oh crap, I didn't want to delete that, then I'll be okay. Yeah, these are some key takeaways. They appear to be overextended. I can leave that comment for later. They do not have 300 stores open. Not a $400 million company. This is just that was some early comments that I'd written. Operating shortfall averaged this much during the past 4 years, resulting in cumulative net losses. I mean, that's actually a pretty useful comment right there. I don't know if it has anything to do with this table up here, though. Let's see. Unearned revenue, training, travel, cash and equivalents, gift card payable. Accounts receivable, accounts payable. Maybe I can find a way to show with the kind of the table height. Like I can group these together like unopened stores, unearned revenue, training, and travel. Those things go together. Let me check and see if I've already identified those earlier in the report. Interweb journalists are the real ones now. Mainstream or script readers. Even some of the YouTube journalists are mostly just kind of, they're making their own scripts, but I think they're not. They're getting AI to make the script for them, so they can put out a lot of content. Yeah, but there's really good. You guys are familiar with probably Lackluster. There we go. TCRL, Lackluster, CoffeeZilla, those kinds of people. Yeah, they are really getting into it. Don't believe they're adding multiple corporate stores each year. Just they don't have too many. 2, 3, 4. At least according to their financial statements. But most only talking about Ben court cases and missing Lego, not knocking them at all. Yeah, I personally haven't heard anybody disparage the parent company of Lego yet. Believe much, but this shows a general pattern as they have to keep it somewhat legal. They have not picked up these stories yet. They're covering court cases, missing Lego, police corruption, all great causes and topics, not the corporate topics. Several I like are getting talking points from above. You guys, I'm still new to chat, so I don't necessarily even, I'm not completely following everything there, but I do know that CoffeeZilla and Lackluster and TCRL, the Civil Rights Lawyer, those are all channels that I like. Okay, my question is, did I already cover training and travel? No. I swear I did. What's this? Oh yeah, those I want. Those I am going to sandwich together right there. Those I can sandwich together. I really thought I'd mentioned that somewhere already. Junie says, some channels you can tell they're smart enough to speak without talking points. Yeah, and different people just have different styles of managing information as well. So some people are more comfortable speaking from a script. Some people are more comfortable speaking without a script. The civil rights lawyer, a lot of what he reads from is the actual legal papers, but somehow he makes it feel, to me at least, he makes it feel like he's just talking. It doesn't feel like he's reading this legal paper. And then sometimes it feels like he's reading legal papers also. I swear I'd mentioned this before. Here it is. Oh. Look, I've given the breakdown, but I didn't give the data table. I knew I had explained it. Right here. Check it out. Okay. Nice. This is where all this effort starts to pay off, because it actually makes the report better. Right here is where I'm trying to go, and that's on page 2. Alright? So I'm going to take this data here. This one. Boom. Put that up on page 2. There. Yeah. As well as associated travel expenses. It's so nice to come back to the end of a paragraph after a day or two and just be able to make a slight improvement in the wording. These obligations include signage, marketing materials, and training, as well as associated travel expenses. And now we've got the data table. Unopened stores, unearned revenue, liability, and then training expense and travel expense. Unearned revenue, liability, training expense, and travel expense. Even though this looks kind of like a traditional table, the way I'm presenting this information is a little bit unorthodox. Because I'm including liability, expense, and I'm showing them all with parentheses. The parentheses are redundant. It's almost like I'm saying that they're positive. I think any experienced accountant who would be like, because someone like me, I might come and see a report like this and say, what's wrong with this guy? He's putting parentheses there. They don't belong there. He's got it all backwards. But I think anyone who's going to have that impulse, someone like myself, is also going to see it and be like, oh, wait, I get it. I understand. Okay, now I got it. It'll be interesting to see if anybody complains about those parentheses. I just see one here. 2026 will show negative goodwill. Yeah, they have in the equity section. They have goodwill, and not too much of that left anymore. It'd be nice to see 2026 trend. People around them better lock down their bank accounts. Yeah, some people are really slippery. They're really sneaky. But there's so many thieves in this world. I'm naturally a very trusting person. And I had to learn over the years that people in general are lying rats. That's not a very nice thing to say about people in general. But I've found that to be true. There we go. Training expense for 2025. Totaled this much, representing an increase of that much. I already had the elevator analysis here in written form. And now it's really helpful to just have this table up here above it. Oh, that's great. That's a big success for me just to do that right there. Unearned revenue, deferred income. I'm explaining the unearned revenue stuff here. And then now, this is almost like, you hear a picture's worth 1,000 words. This data table right here explains everything I'm trying to talk about in this paragraph. And putting the paragraph and the table together, I think, is pretty good explanation. Total revenue is nowhere near. I could put a revenue table right here. Although I just deleted it. Oh, here it is. Here's a revenue table. I think I've just made a lot of really good progress. And I'm very happy with where this project stands now. Really glad I was able to make contact with some people out in a different part of the world. And I don't know if the people that I missed the other day, they were able to come back or not, because I would have to go. Oh, I know how to do this. I can find out. Let's see. This is the main reason I went live this morning. Was to see if these individuals might still be around. Might come back around. Let's see. Live. This one. What's this? June 12th? No, that's. I've had some weird. Let's see. Waiting. Join chat. See, I'm still trying to figure things out. Looks like this one's scheduled and it's never even. It's not even real. So that was me like making mistakes. Here we go. This one is the one. I want to check the chat at the end of this video and see who they were. The point now where I have a little bit of comfort with it. It's part 3. Part 3. Okay. See who it was. That's exactly the point, is to tell us. There they are. Analysis of bricks and mini. Oh, good. Aloysia, I've connected with Aloysia again. Oh, and it was Alan who had made some comments on here as well. And you can see that I wasn't commenting with you guys that day until like the very end of the video. Figs franchise. Lust went through the franchise agreement. It seemed coconuts. Yeah. Okay, that's good to know. So I'm gonna look for that. So I just barely figured it out at the end of the stream that there were people actually making comments on here. Stanley. Okay, so he's the guy I think that I did not get a chance to say hi to. Alan, I've gotten a chance to say hi to. Aloysia. So Stanley has said hello from Australia, and I did not get a chance to say hi to him. Or her or them. So hopefully they'll pop back in some other time. But I am learning a little bit about how to use this YouTube technology. And I even accidentally scheduled for myself a future live stream, apparently. So I guess that's good. I guess it's like I don't know my own power. I like to end with a little bit of music or something. I don't really have it loaded up, I don't think. Well, this is going to be the end of this particular stream. It's about 5:45 Utah time. And in Perth, Australia, the time is currently 7:42 p.m. What? That doesn't... They're like just like the opposite time as us almost. Wow. Yeah, so I have all kinds of songs. I got all kinds of songs. I just try to like, oh here, I'll do a little, I'll try to find, I can pull this up. Hang on. Some of my, how do I get there? Here. Just pick one. Mood Badges is actually one of my favorite songs. Check it out. This is one of my songs that I made.
Your current fixation? The lawn.
Never mind. and blessings to you, Junie Shu. Thank you for visiting. And the outro song, today's outro song, Mood Badges, is about to queue up. And it was cool to see Alan. I'm not here to argue facts, aka Dan. Wakebreaker. See, there was some Australians in here. All right, now we got it. And this has been an Eagle Dog production. Thank you for joining us today for this broadcast of financial analysis. Looking at the bricks and minifigs, financial statements. Trying to figure out what exactly is treasury stock for a small privately owned company. Yes, treasury stock does make sense with regard to a big corporation. But does not seem to make apparent obvious sense with regard to a small corporation. Thank you so much for joining us. Hey, thanks everyone. That was a fun time.